everyone, welcome back to Navellier Market Buzz, episode 33. I'm Crystal Navellier, and I'm joined this week with my father, Louie Navellier. We have an extra special guest, Dr. Ed Yardeni, who's the president of Yardeni Research, providing global investment strategy. He's the author of Predicting the Markets and has over 40 years of experience forecasting the economy. His past roles include leadership at OIK Associates, Prudential, and Deutsche Bank, as well as positions at the Fed, the U.S. Treasury, and Columbia Business School. Thank you so much, Ed, for being here.
Sure, thank you.
And I like to add that we buy Ed's research at my management company. I am hooked on Ed's charts because the charts often say it better than I can. So we really do appreciate Ed's insight.
Thank you.
Now, Ed, you issued a quick take alert on the Vigilantes. Can you explain to our viewers why they're so influential and why you say they hit a home run?
Well, I coined the phrase bond vigilantes back in 1983. There was a terrible inflation experience during the 1970s that most bond investors didn't anticipate. So bond investors weren't vigilant. Inflation soared. The Fed had to raise interest rates, and bond investors lost a lot of money in the bond market. Then at that time, Fed Chairman Paul Volcker came in, raised interest rates dramatically in the late 70s, broke the back of inflation. And wouldn't you know it, just as inflation was basically heading down for many years, we saw the emergence of bond investors becoming bond vigilantes. Suddenly they'd gotten religion and realized how important inflation was. So anyways, in the 1980s, there were about 3 episodes where there was concern that inflation was making a comeback. Everybody was very twitchy about inflation after what happened in the 1970s. And sure enough, the bond vigilantes basically took law and order into their own hands. They basically were saying if the Fed and fiscal authorities aren't going to keep inflation down, they're going to be vigilant and react to it. So bond vigilantes are really just bond investors that are very nervous about inflation. And now they're also very nervous about the size of the federal deficit and the debt. So they've actually become more powerful because there's a lot more federal debt. When I coined the phrase bond vigilantes back in 1983, I went back and read what I wrote, and I wrote that the bond vigilantes were very upset about a $200 billion deficit at an annual rate. Now we're looking at $2 trillion deficits and higher. And so this problem hasn't gotten any better. The bond market has gotten more powerful in dealing with this issue. And as we've seen recently, we've seen President Trump kind of blink and postpone his 90-day reciprocal tariffs because the bond market was acting very poorly, as bond vigilantes worried that the trade war could, at least initially, revive inflation because tariffs would mean higher prices.
Now, do you have any idea how the 145% tariffs on China might eventually be resolved?
No idea, other than both sides have a great deal to lose if it doesn't get resolved. And it seems as though it's kind of, a clash of the titans here between President Xi of China and President Trump. They're both big egos. They both are very powerful, and they both don't want to come out of this thing looking like they gave in. But I see that you've got the Hudson River in the background, and Trump came from Queens, moved to Manhattan, and he's a New York City real estate developer. And when these developers get together and just try to work things out with their unions and politicians and all that, they scream at each other behind closed doors, so none of us have to hear it. And they bully each other and they threaten each other, and then they come up with a deal and come out of the room smiling and shaking hands like they just worked out a great deal for everybody concerned. The problem we have is Trump is using these same skills, but not behind closed doors, and he's using it on a global basis. So it's messy, it's ugly, it's not a pretty thing to watch. But at the same time, at the end of the day, he does want to do a deal. So let's hope that he really is a at doing deals. He's got a spotty record as a businessman, but clearly he's trying to negotiate some deals that are beneficial to the U.S. And he's trying to use America's economic power to bully other countries to kind of give us what we want. But it's going to be real hard to bully China. Um, but there may be another game plan here. It's conceivable that he's got no interest in doing a deal with China. It's conceivable that the U.S. has come to the conclusion that China is a geopolitical threat to the United States, and what we're trying to do is ruin their economy. And it may not be that hard to do. I think that's the game plan.
Well, what's interesting is that the Financial Times this past week implied that China might be getting close to devaluing their currency. Do you think that this actually might happen?
Yeah, I mean, it's absolutely possible, which then means that the dollar is strong relative to the yuan. So, on the one hand, Trump is raising the prices of buying stuff from China with the tariffs. On the other hand, China is saying, well, we can, tit for tat, and we'll devalue our currency and reduce that price. So, well, and of course, that's been one of the complaints here of the Trump administration is that they're looking not just at posted tariffs, but they're also looking at trade barriers. They're looking at currency manipulation. They don't want to see currency manipulation. If the Chinese come and basically, poke a thumb in Trump's face, then by devaluing, it could be the continuation of what is already looking like just a downright straight out trade war. Not a pretty thing to watch. And obviously it has a lot of impact on all of us.
Now, with crude oil prices at a 4-year low, is there hope that consumer prices might remain soft despite this 10% mandatory tariffs?
It's a good question, and I think the answer is clearly yes. It's a situation where the commodity markets have been very weak, particularly the oil price. We have seen the price of oil coming down, and again, there may be a lot of geopolitical considerations there. Ronald Reagan defanged Russia, kind of broke up the Soviet empire by working with the Saudis to lower the price of oil. He's told the Saudis basically, if we're really our allies, we need your help here, and we need you to produce more oil. And it worked. The Soviet Union's revenues imploded. They also had Chernobyl, which made them realize how dangerous they are to themselves. So the Soviet Empire collapsed. And I think now Trump sees lower oil prices as serving a similar purpose of immiserating, impoverishing, bankrupting Russia's war effort here by reducing their revenues from selling oil. I mean, clearly there are a lot of sanctions on Russian oil, but the Russians are getting it to China, they're getting it to India, they're getting it out. So that's something that Trump is clearly orchestrating here. And OPEC Plus just recently announced that they're actually going to produce more oil in a world where Chinese demand has been affected by their own domestic property recession. Also, the Chinese are all driving, or mostly driving, or increasingly driving electric vehicles, and so they need less oil. And it's kind of a strange situation because Trump said, "Drill, baby, drill." We're going to continue to produce more oil and gas and pump it out. The problem is if it drops the price, which it is, it gives less incentive to drill, baby, drill. So, it is still a relatively free market, but all in all, there's a lot of moving parts here in what's going on in the oil market. But to your point, yeah, sure. I mean, energy is a very important part. When Trump was running for president, he promised that he'd bring prices down, and he never said that he would actually bring meat prices down or auto insurance prices down. What he said is that he'll bring oil prices down, and since oil is such an important part of cost, that in turn would help to take the pressure off of other prices. So, and that could take a little while to see it unfolding. But again, everything is so bizarrely complicated because while he's backed off and postponed the reciprocal tariffs on everybody except China for 90 days, he's also going through with his 25% tariffs on imported cars. I really don't understand the need for that. I don't see a national security interest in that at all. And it's extremely disruptive to the trade between Mexico and Canada. But that's going to lead to higher auto prices and really quite within the next few months. And that in turn will lead to higher auto insurance and higher maintenance and repair costs. And the reason I raised all that is because that was a big problem that we've had over the past 2 years with resurgent inflation. So it's a pity that he didn't also hold off on the 25% tariff on autos. And why, he, Navarro, and some of the other hawks on trade feel it's necessary that we produce all the parts of a car, including transmissions and engines. And we do produce a lot of the parts here, but it's a very complicated supply chain, and raising the cost of producing a car is not what he promised in terms of bringing prices down.
Now, with all this chaos and anxiety, do you think that Scott Bessent and Kevin Hassett are the best administration officials to calm the financial markets?
Doesn't really matter much what I think. We've got them whether you think they're doing a good job or not. Uh, I think Peter Navarro is a disaster, um, and I have good company in that regard. Elon Musk called him dumber than a sack of bricks, um, and I think that's actually a pretty accurate description. I mean, he's annoying me big time by saying that the stock market decline is no big deal. It's like, well, maybe not to him. I don't know what he's got his money invested in, but a lot of Americans have their money invested in America. Merrill Lynch used to have an ad, bullish on America, and the idea was you want to invest in America because you believe in America and you're contributing to America. Uh, and even Bessent kind of annoyed me by saying that, well, we're focusing on Main Street rather than Wall Street. I mean, that sounds like that sounds actually pretty socialist uh, for a guy who's a hedge fund guy and should know better. The reality is 60% of Americans have some exposure to the market. And while, the wealthiest obviously have the majority of the ownership of equities, um, the ownership that lower income, lower wealth people have to them is just as important, maybe more important. And I know that from personal experience. I went to my barber on Sunday, and he's open on Sundays. There's nobody there. I sat down. He started cutting my hair, and a guy walks in. He say, "Hey, Herb, how are you?" He said, "Ah, terrible." I said, "What's the matter?" So I lost $40,000 in 2 days last week. He says, "It's horrible. I don't get what's going on." And then somebody else walks in, and they start talking about the market. So I don't know what the incomes of these people, but even the barber complained, and I'm sure he's not independently wealthy. So I think the fact is Wall Street is Main Street. Wall Street depends on Main Street, and this notion that it doesn't really matter what the stock market's doing is just wrong.
So Ed, I think the dollar's down 8% this year. That's pretty dramatic. That's why Treasury prices are going higher, right? It's the international investors in our Treasury securities are nervous.
Yeah, I think we have seen the stock market down, the dollar down, and bond prices down. That's not a good combination. And suddenly people are asking whether U.S. Treasuries are actually a safe asset to own, and with the kind of volatility we're seeing in the bond market. So yeah, I think where the Trump people are naive is in believing you could just upend the global geopolitical and economic order all in one time, and that it's not going to have all sorts of unintended consequences. I mean, some of the consequences have actually been positive. we have seen the Chinese responding to Trump tariffs 2.0 by stimulating their consumers. I don't think it's going to work, but we've been asking them to do this for a long time. We've been asking the Germans to spend more on defense and run deficits to stimulate their economy, and they're doing that. So those have been positive consequences, but the negative consequences have been perception that the United States might actually shoot itself in both feet and get hurt by these tariffs more than the rest of the world, in which case interest rates would have to go down at some point, and that would be bad for the dollar. But I think the dollar issue is the flip side of what's going on in the dollar is what's going on with gold. We've been bullish on gold since it crossed above 2,000, and it just looked like a breakout on the charts. But there's been a good reason for that, and that is when Russia invaded Ukraine, the United States froze the assets that were accessible to us um, of Russia, and so the central banks in countries that we don't get along with, like Russia, like China, Venezuela, Iran, they all realize that they don't want to have currencies like the dollar that can be frozen on them, and so they've been buying gold. So I think we're almost going back to a gold standard in some ways, and that is in fact weakening the dollar. I think the backup in bond yield is partly related to that. I think it's also related to the fact that China and Germany and Europe are running more stimulative deficit financed policies, which has driven up their bond yields. And the bond market's a global market, and so that's pushed bond yields higher. And then I think, at some point here, supply is going to matter. I've been doing this for 45 years, and I've come to conclude that I'll worry about the deficit and the debt when the bond market worries about it. Well, I have a feeling the bond market is getting quite unsettled with the course we're on with regards to deficit financing so much spending.
I'm glad you mentioned gold. We recommend five gold stocks, and I think comics, their inventories were up 43% in January, and then they were up 25% in February, and the dumping of gold in America is even going to impact our GDP estimate. At least
Yeah,
the Fed says so.
yeah,
It's quite shocking.
yeah. It certainly is. But yeah, gold looks like it's hard to come up with a reason not to like gold. I mean, the geopolitical situation's only getting testier, I would think. I mean, maybe things are settling down and the United States is directly negotiating with Iran, but I'm not convinced that much is going to come out of that. So that still may be a situation that gets resolved militarily. But the most unnerving geopolitical hotspot right now is Taiwan, and we're kind of like poking sticks at each other here between the United States and China. And the Chinese says, okay, if you want to start an economic war, we can up the ante here and make it a military situation by blockading Taiwan. The economic impact for the global economy because of the semiconductor trade could be a real problem. Uh,
Yeah.
so things are and this is kind of the new world disorder. Hopefully, it'll become a new world order that works for everybody. But right now, it looks quite disorderly. I mean, clearly, the ideal situation is that well, Trump turns out to be a great negotiator, and so he's claimed that many countries have come and said they're willing to negotiate. And of course, Trump prefers not to actually negotiate. He prefers to bully everybody and say, "You tell me what you're going to do to make me happy," which is a great way to negotiate. If you've got, he keeps talking about cards, that he's got the cards and other countries don't have the cards. But if other countries get really annoyed and don't play his game, it could backfire, as it seems to be doing with China. I mean, I think they're actually surprised in the administration that the Chinese didn't just kind of roll over and say, negotiate and give you what you want. The Chinese aren't going to do that.
Yeah, yeah, and the tariff numbers keep changing. I think today it's their tariffs are 125% on us. So
Yeah. Well,
latest rise.
that's a trade war. That's
Yep,
retaliation.
yep,
I
yep.
mean, when the administration kind of put this thing out, they talked about reciprocal tariffs, and reciprocal is a much kinder, gentler word than retaliatory. Retaliatory means you just keep raising them. Reciprocal means you raise it to what they're charging you and say, okay, now if you don't like that, let's talk them down together. Let's reciprocally lower them. Um, and that's what we're doing with just about every country except China, where we're talking about we're seeing retaliation.
Yeah, yeah, it's amazing.
Now, Ed, could you explain the clash of civilizations that is hindering the economic growth in Europe?
Well, it's again, it's a geopolitical issue. It's not pretty to watch. It's one thing to have a huge inflow of immigrants, illegal immigrants coming to your country. Immigrants historically have usually been a source of economic growth, of great advances. Immigrants, clearly taking a lot of risk when they come in illegally to. They've taken a lot of risks to enter the country, to leave the place that they'd been at. Uh, they're aspirational. They want better for their children, so they work really hard, and then the children go to school. But a lot of it really depends on the extent to which we get a melting pot situation. If you don't have a melting pot, and instead you have a clash of civilizations where the incoming immigrants, all live in their own neighborhood and maintain their own laws, as is the case with immigrants from the Middle East adopting and maintaining their own culture and their own law. When these cultures don't mix, it turns out to be potentially a nightmare. You get more crime, you get extreme partisanship between the immigrants who then, who presumably somehow or other are integrated into the society to the extent that they can vote. Um, and so it creates a lot of tension. It's not kumbaya. It's not like we can all get together along together. Um, and then when you have things breaking out in the Middle East, the partisanship in Europe gets even worse, and you see flags of countries in the Middle East instead of the countries that the European countries where the demonstrations are occurring. That's not a healthy sign. And so I think Europe has a couple of problems. One is they aren't having the people who historically were the locals stopped having babies. The fertility rate collapsed, and so their populations haven't been growing. And they actually welcome immigrants with the idea that they need the workforce. They need people to work. But again, not all of those immigrants necessarily want to work. Some of them are expect to get support from the welfare system. So some do work, but then they don't integrate well into the politics, into the culture of the country. So Europe, I think, is a real big mess. I mean, it's still fun to go sightseeing there. They're not that much fun because there are too many tourists. But tourism really still is a big industry for them. But all in all, the Chinese are also a problem for the Europeans because the one of the big industries in Europe has been the luxury auto market, or the autos in general. The Germans are famous for their engineering, particularly their auto engineering, and yet they have not kept pace with electric vehicles the way the Chinese have, and the Chinese are basically dumping their cars in Europe, and the Europeans have let this happen.
Yeah, I'm glad you brought up demographics. It seems like the whole world is shrinking, except for maybe US, India, maybe a little Brazil. So
Yeah.
it's just hard to grow when you have fewer households, right?
Yeah, you've got to. Well, it means that you've got to do with productivity. I'm pretty
Yeah.
bullish on the outlook for the United States, notwithstanding all the uh, tumultuous events of the that we're experiencing now. But I think the technology solves problems, and one of the major problems on a global basis is we don't have enough workers, and productivity it can solve that problem. Technology can solve that problem by boosting productivity, which has been kind of happening, and so. I think there's still a potential for it. As a matter of fact, in 2019, I started to speculate that, you know what, maybe the decade up ahead here kind of rhymes with the 1920s, 2020s, 1920s. Maybe this is going to be the roaring 2020s because of all these technological innovations that can enhance productivity. And it worked great in the first half of the decade. Now working in the second half. And obviously, a lot of people remind me all the time that the 1920s ended very badly with Smoot-Hawley and a depression. And deja vu all over again is certainly aspects of that right now with these tariff concerns. So I still remain optimistic that we'll get through this and things will be resolved in a beneficial way, and that technology will boost productivity. And the second half of uh, the current decade will be an era of growth. I don't know that I'd go for a golden era. I think Trump's got this golden age ID of the late 1900s. Um, I don't know why he wants to go back that far. The country, is much wealthier now, much better off, much cleaner. Um, so this gilded age ID he has is a little strange, but the goal is to continue. America has actually been very, very wealthy and growing. Real GDP is an all-time record high. Consumption per household is an all-time record high. The net worth of the household sector is an all-time record high. And I know that there's a lot of controversy about wealth and income inequality, but a lot of it has to do with age. The baby boomers are very wealthy. That's because we watched Star Trek, and Spock told us, live long and prosper. The
Hmm.
baby boomers have been living long, and along the way, they bought houses, they bought life insurance policies, they bought stocks, they put money in mutual funds, 401ks, and these things, assets have performed very well, and they now have half of the net worth of the household sector. And guess what? They're not going to hang around for too many more years. And there's going to be, I think there's already a lot of intergenerational transfers. Louis, I'm not going to ask you about whether you pay your daughter's credit card bills. I'm sure you don't. She looks like she's a real entrepreneur and an independent young lady. But I got 5 kids, and I'm still helping a couple of them with their. I mean, auto insurance was $5,000. Yeah, I don't know how young kids can really do it on their own. So I think there's a lot of baby boomers helping even their adult kids.
Ed, do you have any idea who Trump might nominate to be the next Fed chairman?
That's a scary question because clearly he is going to want to put somebody in there that'll make the Fed less independent. And I think most economists would like to see the Fed remain independent. Certainly, everybody in the financial markets would like to see the Fed remain independent. The good news is that the Senate has the role of approving any nominee. So anybody who's like too far to the Trump, there used to be a left and there used to be a right. Now I think there's also a Trump. I don't know what that political extreme is, but if anybody is too supportive of Trump, they probably won't get approved. There have been names mentioned, but I think it's going to be somebody that's a surprise. It could be Scott Bessent. If Trump thinks he's given him some good advice, it certainly is not going to be Navarro, who's kind of talk about a loose cannon. So I don't know, but it could be Bessent.
And finally, we see that your dog Max is in a lot of your videos.
Yeah.
Is this his favorite napping spot?
He loves to nap there. He always comes in when I do these video calls, and I put him right to sleep. So he's really enjoying it. He's when the market was taking a dive last week, he wasn't here. I don't know. He had a sense that maybe I was getting a little edgy and jittery, but he's a very calming influence on me. And I'm working on setting up a cryptocurrency with his face on it. Kind of like the Dogecoin. So we'll see if that works out.
Well,
Oh,
that's
wow.
wonderful.
I love that. Well,
Yeah.
Ed, I do have your book, and for everyone that's watching, where can they purchase this?
Just online on Amazon.
It's a
That's
great read, would highly recommend to you
And
all.
then while we're doing commercials, if people want to see, uh, for individual investors, we have a product called YardeniQuickTakes.com, and they could give that a try.
Okay. Thanks again, Ed. Appreciate
Thank
it.
you so
Yep.
much.
You're welcome.
Now let's switch over to some of the stocks that are announcing earnings. Dad, what do you think about Netflix?
Well, their sales are forecasted to go up 12.1. Earnings are forecast to go up 8.7. There have been some minor analyst cuts, but Netflix is always about new subscriber growth and their guidance. So, as long as they paint a pretty picture going forward, the stock should act very, very well. And it's not quite in the Magnificent Seven, but if it's right behind it, and it is a market bellwether. So, I expect them to have good results and good guidance.
Now, what do you expect for Taiwan Semiconductor?
Well, this is a big bellwether, and this is probably the most important earnings announcement. Their sales are forecasted to go up 40.6%. Earnings are forecasted to go up 48.1. Their guidance remains very important. But if Taiwan Semi has great earnings and positive guidance, then it lifts Nvidia and all the other semiconductor stocks. So this is a big one. And as Ed pointed out, it's they're in a political hotspot. They are trying to move a lot of manufacturing to their huge facility in Arizona. So we'll see. But right now, most of the good chips are made in Taiwan. But that big plant in Arizona is supposed to be making the fancy chips that go in the Apple laptops, the Microsoft Surface laptops, and it'll be interesting if we can onsource a lot of their manufacturing.
Now, what do you hope to see for the retail sales report?
Well, it better be good. We really do need consumers to cheer up and start spending. And spring is arriving, and people should be getting out and about more. I like to look at where they're spending, and of all the categories, I would like a majority to be up. But let's just hope it's up. If it's down, that would be horrible. But from what I can tell, it looks like consumers are pretty busy out and about buying, and it's going to be interesting because they've dumped a lot of goods in America trying to beat the tariffs, and they're going to have to discount that stuff to sell it. So, we really do need retail sales to be positive, and I'm expecting a positive report, but it better improve in the upcoming months with all the discounts they'll be offering us.
Well, thank you so much, everyone, for joining us this week. We really hope you enjoyed it and also listening to Ed's insights. Thank you so much again for liking, commenting, and subscribing. If you have any questions that you'd like us to address next week, please leave them in the comments below. But until then, we will see you all next week for a new video.